I want you to think about the last time something genuinely changed the direction of your financial life. Not a small improvement, not a slight raise or a modest savings deposit. An actual directional shift, where the path you are on bent towards something meaningfully better. For most people, those moments are rare, and for most of human history, they were reserved for a very specific type of person. Someone who was born into the right family, someone who got into the right school, someone who knew the right people, worked at the right firm, had access to the investment opportunities that only circulated among the already wealthy. That is how wealth compounded, quietly, privately, among people who were already close enough to touch it. Crypto broke that system. Not perfectly, not without risk, not without the very real possibility of losing money if you approach it without discipline or understanding. But it broke it in a way that has already been documented, measured, and verified by researchers and institutions around the world. And the 5 reasons it is going to change your life specifically, not hypothetically, not in some distant future, are already in motion right now. Let's go through them. Reason 1. Financial freedom is no longer reserved for people who started wealthy. This is the one that the traditional financial establishment genuinely does not want to say out loud, because the entire architecture of traditional investing, the mutual funds, the index funds, the retirement accounts, the bond ladders, was designed by people with capital for people with capital. If you have $50,000 to invest, the system works reasonably well for you. If you have $500, the system gives you marginal access to the same mediocre returns and charges you fees that eat a disproportionate percentage of the gains. The Bank of America Private Bank published research in 2024 that found 3/4 of investors aged 21 to 43 now believe it is no longer possible to achieve above-average investment returns through traditional stocks and bonds alone. 3/4. These are not crypto enthusiasts saying this. These are clients of one of the largest private banks in the United States. And what are those same investors doing instead? Allocating 31% of their portfolios to alternative investments and cryptocurrency, because the return profile is different. Since its launch in 2015, Ethereum has grown by over 82,000%. Bitcoin has produced returns that no traditional asset class has come close to matching across any comparable time frame. 172,000 people worldwide now hold over $1 million in crypto. That number grew by 95% in a single year between mid-2023 and mid-2024. In the first 6 months of 2025 alone, over 26,000 new Bitcoin millionaires were created. These are not people who inherited wealth. These are people who bought an asset early, understood what they owned, and held it with discipline through the volatility that scared everyone else away. The path from nothing to financial freedom still requires patience, research, and risk tolerance, but it now exists in a form that does not require you to already be wealthy to access it. That is genuinely new, and it is genuinely life-changing. Reason 2. You can build generational wealth for the first time in your family's history, and it does not require a trust fund to start. Generational wealth is one of the most misunderstood concepts in personal finance. Most people think it means having a lot of money to leave to your children, but what it actually means is building an asset that compounds across time, that your children and their children can build on, so that each generation starts from a higher floor than the one before. For most of human history, that required either land, a business, or financial assets large enough to appreciate meaningfully across decades. None of those were accessible to the average person without either inheritance or extraordinary circumstances. Crypto changes the math, not because the prices always go up. They do not always go up in the short term, and anyone who tells you otherwise is selling something, but because the asset class as a whole is growing at a documented compound annual growth rate of over 30%. The global cryptocurrency market was valued at $2.96 trillion in 2025 and is projected to reach $7.98 trillion by 2030. If that trajectory holds, and the institutional adoption evidence, the ETF approvals, the corporate treasury allocations, the sovereign nation legal tender decisions all point in that direction, then an asset purchased today and held across a decade is not a speculative bet. It is a documented, compounding store of value with a larger and more institutional buyer base than it has had at any previous point in its history. The Henley and Partners Crypto Wealth Report documented that over 325 individuals now hold over $100 million in crypto, and that number grew by 79% in 1 year. These are people building multi-generational wealth in real time from positions they built themselves. The vehicle exists, the infrastructure exists. The only thing that determines whether your family benefits from it is whether you start, hold with discipline, and structure it correctly for the people who come after you. Reason 3. Crypto gives you something no traditional bank has ever genuinely offered: true ownership. This is the reason that is hardest to explain to someone who has never experienced the alternative, because most people have never had their bank account frozen, their assets seized, or their savings inflated away by a currency crisis. But 1.4 billion people on this earth right now are unbanked. They have no access to a traditional financial institution at all. Hundreds of millions more live in countries where their government has frozen bank accounts during political crises, confiscated assets through capital controls, or inflated their savings into worthlessness through currency devaluation. Argentina, Venezuela, Lebanon, Turkey, where the lira lost over 90% of its value in 5 years, Nigeria, where citizens watched the naira collapse while the central bank imposed withdrawal limits that restricted how much of their own money they could access per week. In every one of those situations, people who held Bitcoin or other decentralized assets were protected in a way that people who trusted the banking system were not. Because a Bitcoin private key cannot be seized by a government that does not know it exists. A hardware wallet in a drawer is not subject to capital controls. A self-custodied crypto position cannot be frozen by a bank that decides your transaction is suspicious. The decentralization that crypto critics describe as a flaw, the absence of a central authority, is precisely the feature that makes it the most powerful financial self-sovereignty tool that has ever existed for ordinary people. 65% of millennials and Gen Z now view cryptocurrency as a preferred investment over traditional stocks. That is not a statistical anomaly. That is a generation that watched the 2008 financial crisis, that watched 0% interest rates destroy the savings accounts of their parents, that watched housing become unaffordable while institutional investors bought entire neighborhoods, and concluded that the system was not built for them. Crypto was built for them. For everyone, actually, but especially for the people the traditional system was never designed to serve. Reason 4. The early adoption window is still open, and it is not going to stay open forever. This is the one that matters most right now. In March of 2026, only 9.9% of the global internet population owns any form of cryptocurrency. 9.9%. That means over 90% of the people who will eventually participate in this market, who will hold Bitcoin in a retirement account, who will transact in stablecoins through their bank, who will invest in tokenized real-world assets through a regulated platform, have not arrived yet. The institutional infrastructure for their arrival is already built. Spot Bitcoin ETFs are live in the United States with billions in inflows. 60% of Fortune 500 executives say their companies are actively working on blockchain initiatives right now. 1 in 5 Fortune 500 executives now see on-chain initiatives as a key part of company strategy, a 47% year-on-year increase. The stablecoin supply reached $227 billion in early 2025. Real-world asset tokenization grew 245 times in 5 years, surpassing $21 billion by April 2025. The infrastructure is built. The institutional capital is positioned. The retail mainstream has not arrived yet. And every technology adoption curve in history, the internet, mobile phones, social media, tells the same story. The people who were positioned before the mainstream arrived captured the majority of the value. Not because they were smarter, because they were earlier. The window to be earlier than 90% of the world in this market is still open in 2026. It will not be open in 2036. The question is not whether you can see the opportunity, it is whether you act on it before the window closes. Reason 5. Crypto doesn't just change your net worth, it changes how you think about money. And this is the one that nobody talks about, but in the long run, it might be the most transformative of all 5. When you start seriously engaging with crypto, when you start understanding what a blockchain actually is, how consensus mechanisms work, what monetary policy looks like when it is written in immutable code rather than decided by a committee, what it means to own a truly scarce digital asset, your entire mental model of money changes permanently. You start seeing inflation not as an unfortunate side effect of economic management, but as a deliberate policy that transfers wealth from savers to debtors. You start understanding why the traditional financial system's gatekeepers have fought so hard against decentralization, because decentralization removes their ability to extract fees from every transaction, every account, every cross-border transfer. You start asking better questions about every financial product you touch. Who profits from this structure? What happens to my money between transactions? Who controls the rules and can change them without my consent? These are not radical questions. They are the questions that financially sophisticated people, the people running the institutions, managing the funds, structuring the deals, ask about every financial arrangement they enter. Crypto gives ordinary people access to the same level of financial literacy that was previously only developed through decades inside financial institutions. And once you see the system clearly, once you understand what money actually is, how it is created, who controls it and why, and what alternatives exist, you can't unsee it. Your relationship with money changes. Your decisions change. Your ability to build and protect wealth over time changes. Not because crypto makes you smarter, because it forces you to understand things that most people are never taught and never have a reason to learn until something in the market makes the questions impossible to ignore. So, here's where we are. In 2026, with 172,000 crypto millionaires already documented, with a 30% compound annual growth rate in the global crypto market, with the institutional infrastructure for mass adoption already built, and the retail mainstream still 90% absent, with the decentralization tools for financial sovereignty already available and already protecting people in currency crises around the world, with an early adoption window that is measurably closing as each new ETF, each new corporate treasury allocation, each new sovereign legal tender decision brings the mainstream one step closer to the door. The 5 reasons crypto will change your life are not predictions. They are descriptions of things that are already happening, to 172,000 people who became millionaires, to the millions of unbanked people accessing financial services for the first time, to the generation that is allocating 31% of its portfolio to assets the generation before it never considered, to the people in economies with collapsing currencies who discovered that a private key is a more reliable store of value than a central bank. The only question is whether you're one of the people who acts on that understanding now, or one of the 90% who arrives after the window has changed shape. It is still open, right now, today. If this gave you a new way of seeing what you are actually building toward, smash that like button right now. Inspiring content only reaches the people who need it most when the algorithm sees it performing, and that like is the fastest way to make that happen. Subscribe if you want the content that explains this market clearly, honestly, and with real data, so that every decision you make is grounded in understanding rather than hope. Now, here's your comment. Which one of these 5 reasons is the most personally meaningful to you? And what made you get into crypto in the first place? Drop it below. I want to hear the real stories. And if you know someone who is sitting on the edge of getting started but hasn't pulled the trigger yet, send them this video. It might be the thing that finally makes it click. The opportunity is real. The window is open. What you do with that is up to you.